Welcome back to my daily report market videos with me, Richard Perry, market analyst at Hantec on Tuesday 16th of July, looking at dollar yen, which fell over back end of last week, really did fall over again and started to test to the downside, although that support has held yesterday and into today. 107.80 was Friday's low, and that pretty much held yesterday and again has held early morning today. So the market is taking on a little bit more of a neutral position, although there is certainly this negative bias considering we're trading underneath all these falling moving averages. A little bit of a tick above the 21-day moving average just helps to stabilise the sentiment a little bit. But it certainly looks as though at the moment rallies are still being seen as a chance to sell, and you've got the stochastics falling, which stochastics tend to be the sensitive near-term trigger. MACD line's more of a looking further out momentum indicator, whereas the RSI is sort of middle of the road. And I think that the fact that the stochastics are still falling away just lends you to suggest that the market is still under a little bit of pressure to the downside. So we've still got these momentum indicators which are basically holding ground a little bit on the RSI MACD line. So we're not all out negative by any means. 107.50 as a basis of support holding as well. So that's a relatively positive aspect to this as well, given the fact that, as I said, the support at 107.80 again is holding. So there's a little bit of a stabilisation that we see on dollar yen. Hourly chart, you can see that stabilisation at 107.80 tested 1, 2, 3, 4 times actually in the last couple of sessions and held. But there is still this run of lower highs and lower lows, and momentum indicators sort of negatively configured there. Just where or how the market responds with the hourly RSI at 60 now, how the market responds to this 108.10 level of resistance that we've hit a couple of times in the last day or so. How the market responds there will be interesting. If it breaks above 108.10, RSI into the mid-60s, MACD lines above neutral, that starts to look a little bit more positive and building a recovery. So we're in this 30 pip band, 107.80 to 108.10, and a near-term breakout above 108.10 would improve that outlook. But then you've got the overhead supply, 108.50 area to 109 figure, that sort of 50 pip band of resistance. But I think the outlook at the moment is fairly stable, although with a very slight negative bias, but that negative bias would be negated above 108.10 on a decisive basis. So I wish you good luck in your trading today. Please click here to subscribe to my videos on YouTube, and also go to our website where you can sign up for our trading webinars. So I wish you good luck in your trading, and I'll speak to you later.